So we had the Central Bank of Kenya come through with its interest rate decision yesterday, a cut of 150 basis points being implemented. Your view on what's come through?
Yeah, that was largely expected by the central bank to cut the main rate. We were expecting between 100 and 150 points, but it came in at 1.5%. So while we expect the market to follow suit, particularly the banking sector to start revising the rates downwards. As you mentioned, also we expect the shilling to react a little bit, weakening, and we think that is also going to to lend support even to the rally that we've had in the marketplace. So I guess going forward, I think it's going to impact positively on all those areas of the market.
To what extent, though, do you see the banking fraternity actually following in line with this cut that's come through? Because we know a huge criticism in the past has been that while the Central Bank of Kenya has decreased and slashed rates pretty aggressively over the past year, Rufus, we've failed to see the banks actually follow in tandem.
Well, I think maybe just looking on the other side, what some of the reasons that the banks gave is that the lending business not only does not only contain the interest rate risk, the other risk as well, and as we are heading into election, the next 3 months, the political risk is going to be a huge factor going forward. So it's not only interest risks that the bank is only looking to. So that's the reason why sometimes they take a bit of time, in following the market rate. So, but I guess that's the same trend we're going to see even with this occurrence. So, well, that's just how it's been, and perhaps that's going to be that's how it's going to be even for this particular event.
Having said that, yesterday a lot of the attention being given to the banking index, Rufus, a lot of positive sentiment around banks and what they're expected to come through with in terms of their earnings moving forward. Many expected to turn in healthy full-year profits by March, and taking cue from, of course, the strong 9-month numbers that came through and whet the appetites of foreign and local investors alike. Your view on the banking sector as a whole?
We expect the sector to do well, particularly as the rates come down. Then we think that's going to give incentive for the banks to to lend more. And as they lend more, then that means even higher margins for them. So I guess, yes, for the full year, we expect some good returns. But even for this whole year, if the rates keep, stay at the low levels, we expect them to do well, even better than last year.
Taking a look at your picks within that sector, moving into 2013, what's sitting strongly on your radar screen right now?
Okay, first of all, we've divided our view into half. That's just before the election and after. We think between now and the election time, we're going to see the market just doing a lot of we're going to see the market swinging back and forth, really not going anywhere. As guys just take a wait and see attitude to see what's going to happen after the election. We expect now if the conditions on the macro economic environment stay as it is, which we think is very favorable, then we're likely to see the second leg of last year's rally continuing, perhaps maybe do about 25-30% upward trend.
Looking at exposure to the, some of the sectors that, of course, are influenced by economic activity. I mean, we've touched on the banking sector, but within the tourism space, we've had Serena Hotels making an announcement that it's keen to buy KDDC's stake in a luxury lodge. So TPS Serena making headlines this week. What's your view on the players within that tourism sector? Of course, with tourism being a major revenue earner for the Kenyan economy.
Yeah, that's correct. Well, for this particular firm, in my view, I think this is a very strategic decision, because what we've seen, particularly in the last 12 months, is that we've seen a lot of competition coming in, a lot of major international, hotel chains setting up hotels within the, the urban areas like in Nairobi, Mombasa, and even Kisumu. But we've not seen hotel chains going into, the park to the game parks and the reserves, which I think that's where TPS has a strong competitive advantage. So I guess this decision to take up Mountain Lodge is really a strategy of moving away sort of, you know, from the town center where there's a lot of competition to areas where there's less competition. So I guess going forward, it's going to be an interesting watch to see how that plays out, particularly in the impact on its revenues.